Assalamu alaikum wa rahmatullahi wa barakatuh. Hope everyone is doing well today, inshallah. Just like to do a mic check, make sure everything is working well before we start, inshallah. Please let me know in the comments if you can hear me. Alhamdulillah, wassalatu wassalamu ala rasulillah wa ala nabiyyina Muhammad wa ala alihi wa ashabihi ajma'in. Allahumma salli wa sallim ala nabiyyina Muhammad وعلى آله وأصحابه ومن تبعهم بإحسان إلى يوم الدين ثم أما بعد رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقه قولي ربنا آتنا في الدنيا حسنة وفي الآخرة حسنة وقنا عذاب النار اللهم فقهنا في الدين وعلمنا التأويل يا رب العالمين. So today inshallah ta'ala we will be discussing a few topics inshallah. We'll be discussing firstly rent-to-own contracts, and then we'll be discussing the Murabaha contract or the Murabaha model of financing, and then after that we'll be talking about Musharaka al-Mutanaqisa, and then Tawaruq, bi'idhnillah, if the time gives us, we have enough time, inshallah ta'ala. So to start off, rent to own or ijara al-muntahi bit-tamlik is a type of contract which is used for purchasing a property, purchasing a home, or purchasing a commodity. And the gist of it is basically, or to summarize it, or to give like a full, a summarized picture of this type of model, is you enter into a rental agreement with someone for example, a house or for a car, and you are renting this house or this car over a number of months or years, and at the end of that contract, you become the owner. So why would someone want to do this as opposed to just selling you right out and then you paying in monthly installments? So the main advantage of this type of contract is for the owner of the item, and that is at the time of when you're renting it, during that period, the 1 year, 2 years, 3 years, 4 years, 10 years, whatever it is, while you're renting it, the title of that commodity, of that home or that car or whatever it is in the owner's name and is not in the renter's name, right? The title is in the person that is the owner, his name, right? So it does not get transferred, right? So he has more security over the property in case you're not able to finish the payments, right? And if you compare this to a normal, when you sell someone, bay al-ajil, when you sell someone on terms like you sell someone and they pay you monthly payments, you transfer the ownership right away to the person that it's sold to, and he owes you a debt, right? And in this case, it's different because you're paying rent, and then at the end, there is a transfer to the renter, who now becomes the owner. So the definition that the scholars give, or the IOFI standards say, or they give for this type of contract is, in ijara muntahi bi tamlik, the method of transferring the title in the leased asset to the leasee must be evidenced in a separate in a separate document from the ijara contract using one of. Okay, so the definition that um, that the scholars give of this before we jump ahead is that in this type of contract, it is a rent-to-own contract where a person is renting something or leasing something, and usually a lease is something that's a long term, and at the end he possesses that item. So two things: he's leasing it, he's renting it, and at the end of that term, he becomes the owner of that particular item or particular um, commodity. Now, in the rent-to-own contracts, the scholars mention three types, or the IOFI standards. They mention three types, right, or three ways that it can happen. So number one is, or before this, before going into this, they mentioned that the rent agreement or the lease agreement must be separate from the document that promises a transfer of ownership. So you have the rental agreement, which is a lease for however long, 2, 3, 4, 10 years, whatever it is. And then you have another document, which is a promise to transfer the ownership after this period is finished. And in this document, you can put different conditions. So they mentioned that you have to use one of the following methods. Number one, uh, by means of a promise to sell for a token or another consideration, or by accelerating the payment of the remaining amount of rental, or by paying the market value of the leased property. So in the separate document, you can have a promise. It can be a promise to sell the item at market value. It can be a promise to sell for whatever value you want to sell it at, right? So an example, or for example, in a lot of lease to own car rental car agreements, they would lease it for 5 years or 15 years, or not 15 years, but they would lease it for a certain amount, maybe 5 years or 3 years or whatever the case is. And then at the end of that, maybe the car is worth $30,000 in total, and they at the end of the 3 years, maybe you've paid 15,000. So they would say that at the end of this rental agreement, you pay the remaining $15,000 and you own the car or you own that vehicle, or you can walk away and all of that will be considered rent. So similarly here, you can do the same thing. You put an amount, whatever you want to put, the market value. So you can put the market value, meaning that there's not necessarily a price at that time, but it will be you give the option to purchase it at whatever it's valued at that time. So we know, of course, a car, right? The value goes down, right? And not necessarily you don't necessarily know the price of the car after 3 or 4 years, right? Perhaps it could be in very good condition, and perhaps the owner or the person that was renting it or leased it for that many years, he didn't drive it much, so it would be higher value, of course. Perhaps in another situation, the car has been driven to the max. It's been driven so much that there's so much deteriorate to the car, right? So you don't know the exact price, right? So you can choose to put a price, or you can say, okay, it's going to be at the market value, and you give the option to purchase, right? Or you can sell it for a token, any small amount or any amount of money you want. Or another scenario in this same method, or the same point, is that you can say, look, I need to make this much money. I need 5 years worth of rent, for example, for me to cover my expenses and a little bit of profit. Now, if at the end of the first year you decide that you want to purchase this right out, all you do is pay all of the rent for the 5 years. So you accelerate the rental income, the rental price, sorry, the rental amounts, and you pay all of that, and the car is yours, or the item, the commodity, whatever it is yours to keep. So that's the first way. The second way is, or the second type is a promise as a gift for no consideration or for no money, right? So what you do is you would have in the second document, you say that at the end of the term, I gift this to the renter. The third way is a promise as a gift contingent upon payment of the remaining installment. So again, this is similar to the first one, where you gift it to someone, and it is a gift contingent that he pays all of the payments, right? Which is pretty much the second point or the second type, but with the contingent or the condition of the gift. Now, in all of these cases, the document must be the document that's evidencing or that's promising this gift must be a separate document. It's very important that there is a second document, and it's not included in the first document of the rental contract. This is because we can't make a contract of two things, or we can't have two contracts in one contract. We need to make them separate. The promise of a sale or the promise of a gift contingent upon the particular event should be an independent contract of the rental agreement or the rental contract, and cannot be taken as an integral part of the contract of rental or ijara. So it cannot be connected to it. This is a separate thing, and the reason is because this is not we're not linking it to the rental. Rather, it is a promise, and it is something separate. It's a promise or it's a gift that is a separate agreement, and it's not linked to the original contract, because there could be other ramifications if you linked it to the original contract. And as we said, it's a promise and it's not a contract, right? So another point here is that the gifting or the transfer of this commodity must be done after the lease is up, because you can't make a contract on one. You can't make two contracts on one item at the same time. So you can't be renting the thing, that house or that car, and selling it at the same time, right? You can't do that. It's not physically possible, right? And it's not permitted as well. So it must be done after. The promise to transfer ownership by way of one of the methods that we specified is binding by the leaser only. So it's binding by the leaser, and it's not binding. So it's binding by one end, and the promisee, or the one that has been promised to, has that option of coming out or accepting or not agreeing to proceed. And this is because we are not allowed to commit to a contract and execute a contract before it actually happens. And as we've spoken, one of the shurut of bay', one of the conditions of a sale, is that it happens najiz, and it happens at the current time that you're executing it, right? You can't say that you can't agree on purchasing something in the future, right? You can't say that I purchased this car from you in 1 year's time from now. That is an invalid contract. It has to happen right now. So that is one of the reasons why we cannot have the promise. We can't make a contractual agreement. Rather, it has to be a promise from one side only. And at the time of execution of the contract, then he can agree or he can disagree to accepting that gift, or purchasing the home or purchasing the car outright. So in all cases of transfer, the ownership by way of gift or sale, it is necessary when the promise is fulfilled, so at the end of the terms, at the end of the lease, that a new contract is drawn up, since the ownership to the property is not automatically transferred by virtue of the original promise document that was drawn up earlier. So it's very important that at the end of the lease, when you're transferring this commodity, you have a new document that draws up this transfer of the asset to the renter. the previous document, which is the document of the promise, is not sufficient. The transfer of the ownership in the lease property cannot be made by executing along with the ijara a sale contract will be a sale contract that will be effective on a future date. So as we said earlier, you cannot um, have the ijara or the rental and the sale executed at the same time. Rather, the sale contract has to be executed at the time of the actual sale. And that concludes the rent-to-own contracts as per IOFI standards. And if you'd like to see more information, you can go to the IOFI standards. They have a PDF on their website, and they list all of the intricate details under the chapter of al-ijara al-muntahi bit-tamlik, or rent-to-own. The next chapter that we'll discuss is Murabaha. Murabaha in Islam comes from the word Murabaha comes from the word ar-ribh, and ribh means profit. So this actually means profit. Murabaha means a contract of profit, a contract of a known marked up profit. Or the technical definition by the scholars is a sales contract which the buyer and seller agree on a markup known profit or cost plus price for the items being sold. A basic overview of the Murabaha contract is a bank or a financer buys the property that you want. So you choose the property, the bank or the financer, he buys that property. Say, for example, he'll buy it for $100,000. And then he will add on another $20,000. So he will sell it, he will take full possession of it, and then he will sell it to you for $120,000 in installments. So instead of you having to buy it cash at $100,000, he'll sell it to you at $120,000 over the period of 10 years, for example. And that has to be in a separate contract from the first one. It has to be two separate sales. What is known in the Islamic world, what is called Murabaha al-Wa'du bil-Shira. And this literally means Murabaha with a wa'd or a promise of purchasing. And the reason why they have this is if someone is interested in purchasing a product or purchasing a home or purchasing a car, what they normally do is they would look at what product, what commodity, what home, what property they want to purchase, and then they would sign an agreement of a promise that they would purchase this product back from the bank, right? And that will ensure the bank that, or the financer, that look, I'm not wasting my money just purchasing something and it's going to come into my name, my ownership for this person that wants to buy it. Rather, they secure that they have a buyer already. And it's very important because there are certain rules that come with this promise. And the scholars have mentioned that if a person signs this agreement of Murabaha al-Wa'd bil-Shira, a promise to buy something, and then he goes against his word later on, so he tells the bank or the financer that, look, I promised to purchase this house from you. This is the house that I want. It's on this address. This is the exact house. Please purchase it for me, and then I will purchase it from you at a markup, whatever they agree upon. And then later on, the bank purchases it, and the person that was intending to buy it, he doesn't want to buy it anymore. What happens? So the scholars have said that he has to pay the damage that is done. So if the bank has to sell the house, any loss that they take, then this person, since he made the agreement to purchase it, he has to pay the damage. So if the house is $100,000 and he agreed to purchase it at $120,000, right? And then now the time comes, the bank purchases it, and they ask him, okay, look, we're ready, sign the agreement here. You can purchase the house from us. It's in our possession. He says, no, I changed my mind. I don't want to do it anymore. Now the bank needs to go and they need to sell this house because they don't want the house, obviously. So they go and they sell the house for maybe $90,000. That $10,000 difference, if there is a difference, the person that had that had signed the agreement of promise needs to pay that damage or that difference between the two amounts. So that's what the IOFI scholars have mentioned in this type of contract. Now, the conditions of this contract is that the financier or the bank must take complete ownership and liability and responsibility of the property, and then have a separate contract to sell to the second buyer. So it's two separate contracts, two separate purchases that happen. Number two is that there must be two different contracts. As we mentioned, this point is emphasized. Number three is that the price must be known. So the price must be known and agreed upon before they, of course, before you purchase the product, right? This is something that is in all contracts. The price must be known. Other rulings that pertain to Murabaha. So a Murabaha contract cannot be carried out on gold, silver, or other currencies. So because we said when we studied the chapter of currency that there must be it must be transferred instantly, yadan bi yad, hand to hand, meaning it must be on the spot transfer. So in this case, you can't agree to purchase 10 kilos of gold over 10 years, right? It wouldn't be yadan bi yad. It would not be a spot purchase. So gold, silver, any type of currency must be traded on the spot and cannot be traded in a Murabaha agreement. It is permissible for the bank to charge a realistic or a real feasibility study on the customer that they are going to get, and on the home or on any type of study that they need to fulfill their needs or their research. And the customer should be allowed to have access to this feasibility study as well. The bank can take a security deposit that they can take if the purchaser does not fulfill his promise to purchase the asset. In case that the promise is not fulfilled, the bank is only allowed to take the difference between the cost price and the sale to a third party if there is a sale and there is a loss that incurred or damage, and not the Murabaha profit that is calculated. So the bank can only take the loss that they get. They cannot take the amount that is agreed or the profit amount. So for example, in the case we mentioned, a person agrees to purchase the house for $120,000 and the bank paid $100,000. The bank cannot come and say, look, we're going to take this $20,000 plus whatever loss we have. If they sell it for $90,000, they'll say, okay, look, we're taking $30,000. No, they can only take it for whatever losses they incur from selling the house. Next, this concludes the chapter of Murabaha. And again, if you want to find more information, more in-depth information, you can look at the IOFI chapter of Murabaha, and you'll find more information there. This is a summary of the points that they mentioned in that chapter. Next, we have Musharaka al-Mutanaqisa, or diminishing partnership, a diminishing partnership. And the definition of this is where two or more parties purchase a property with the intention of one of the partners solely using the property and eventually buying out the share of the other partner or partners for full ownership. The one using the property is required to pay the market rate of rent to its proportionate partners, and any amount over that rent is contributed towards the payment of the property. So this is something which is common also in the world of Islamic finance, and this is where, for example, you go to it is done with usually with a credit union or with a bank, an Islamic bank, and that is a bank or a financer or someone that will be purchasing the home, they will, for example, they will put down half of the amount for the home, and the owner, the person intending to own the house, will put another half. And the owner will be living there, so he needs to pay rent. Now, when they calculate the rent, for example, if the rent is $1,000, since he owns half of it, he doesn't need to pay, half. He will get a discount of half because he owns half, but he needs to pay half of that rent to the other partner, so he will pay $500 to the partner a month. Now, any extra over that $500 every month, he will then that will go to the down payment or to the principal of the home. That's a general summary of the diminishing partnership. If you go to a company that does this, there are many other things that they talk about, many other conditions, many other ways that they calculate it. But this is just a general tasawwur, or general picture, a general illustration of this contract. Conditions. Each partner, so the scholars have mentioned that each partner is liable for his portion of expenses. So if they're in it 50-50, then they should split the property tax, split the repairs on the home, split all of the expenses that are incurred from the property, and it should not fall on the buyer alone. And this is something where a lot of the, or all of the Islamic banking home companies or Islamic financing companies today, they don't do this. What they normally do is they make the buyer pay all of the expenses, and this is, the scholars have mentioned that this is wrong. And they have said that if you agree, then it's fine. You can do tanazul of your haqq. You can, give up your right, and you can pay for all of the expenses. It's up to you. But initially, when you're looking at a contract, that this is not a condition that is valid. However, it does not invalidate the entire contract. Just this condition would be considered invalid, and it would be up to the purchaser to agree or to disagree, to go ahead with the contract. Number two, the second condition is the buyer is allowed to take all expenses if he wishes to give up his rights. Right? This is a continuation of the first point. So the buyer can take on all the expenses if he wants to. It's his choice to give up his rights if he wants to. The third is the contract is still valid if there are conditions that are invalid. So the contract in and itself are valid, even if there are conditions within the contract that are invalid, right? And as we said earlier, this does not invalidate the entire contract. An invalid condition is basically at the person at the other end of the person, the receiving end, whoever that invalid condition is upon. It's his choice to either execute the contract, go ahead with it, or to dissolve it and not go ahead with the contract. Lastly, we will cover the chapter of Tawaruq. And Tawaruq, the scholars have mentioned, they have spoken about this, and this is a type of agreement or a contract when a person is in need of money. This is something, a makhraj, a way that he can attain money in a halal manner. And Tawaruq, the definition of Tawaruq is to purchase a commodity or an object or something with financing, paying in the future or paying in installments, and selling that item right now for cash, usually a lesser amount, to other than the seller. So for example, I need $20,000, right? Some reason I need $20,000. There's an emergency, whatever the case is. I need $20,000. I don't have it. What I can do, or what someone can do, is they can go and they can purchase a car, for example, right? He purchases a car that is worth maybe $30,000, right? And he purchases this car on installments. So you would need to pay this over, for example, 10 years. So what you purchase the car goes into your name, you are the owner, and then you sell the car right as soon as you get it for 20,000 or 25,000, whatever it is. Usually it would be lesser than the amount that you purchased it, and then you can benefit from the $20,000, $25,000, and then you would pay that off over the next 10 years, right? So this contract, some of the scholars have differed upon this. Is it halal or is it haram? Because this resembles riba a lot, right? It is very close to riba. However, the majority of the scholars allow this type of contract if there is a realistic need. And the evidence is وَأَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَا. In reality, Allah subhanahu wa ta'ala said Allah has permitted trade and forbidden interest. In Surah Al-Baqarah, we know the famous ayah. And in reality, this contract is basically two trades made, in order to facilitate your financial needs. Right? You're not really going into riba. Although it resembles riba, it is not riba. So Ibn Taymiyyah actually said that this contract was haram and is a workaround for riba. So this is his perspective on it. However, Sheikh bin Baz, who was the Mufti of Saudi Arabia, Sheikh Ibn Uthaymeen, who was one of the predominant scholars in Saudi Arabia as well, have allowed it with a few conditions. So they've said, number one is that the person needs to be in real need for cash. Number two is he is not able to get it from another source, such as a loan from a friend. And number three, he must buy and sell the item to two different people. So he cannot buy and sell it. He cannot buy the item from someone over 10 years and then sell it back to the same person, because that would be bay'il ina, as we covered, right? Rather, he has to buy it from someone and then sell it to a third party, and that would be allowed, inshallah ta'ala. وصلى الله على نبينا محمد وعلى آله وأصحابه أجمعين. I will take a few questions now, بإذن الله تعالى. What if they receive more than the contract amount? What if the bank receives more than the contract amount? I don't understand the question. If you can clarify, that would be better. I don't understand why the bank would receive more than the contract amount. If there are any other questions, please put it in the chat and we will answer them, inshallah ta'ala. In the Murabaha contract where they sell the asset to recover the amount. Okay, so if the bank receives more than the amount, then to recover the amount, then the bank will profit from that trade, and that's fine, right? The customer will not receive any profit from that because he didn't invest anything, right? He didn't use his money. He made a promise, but he did not use his money, so he would not receive any profits. This is as per the IOFI standards. This is what they have mentioned. Wallahu ta'ala a'lam. وصلى الله على نبينا محمد وعلى آله وصحبه أجمعين. سبحانك اللهم وبحمدك أشهد أن لا إله إلا أنت أستغفرك وأتوب إليك.